Welcome to Ray Dalio Warning. Please like, subscribe, and share.
Right now, as you're watching this, silver and gold are screaming a warning that most investors will completely miss. Ray Dalio, the billionaire investor who predicted the 2008 financial crisis, says these precious metals are signaling something far more serious than a market correction. If you're holding traditional assets without understanding what gold and silver are telling us about 2026, you could watch your wealth evaporate while a small group of prepared investors protect and multiply theirs. What you're about to discover in the next 20 minutes could be the difference between financial security and devastating losses. Ray Dalio, the founder of Bridgewater Associates, the world's largest hedge fund with over $160 billion in assets under management, has built his entire investing career on understanding economic cycles and reading market signals that others ignore. While most investors focus on stock prices and interest rates, Dalio has consistently emphasized that precious metals like gold and silver act as a barometer for the health of our entire economic system. And right now, that barometer is flashing red. In this video, we're going to break down exactly what silver and gold are signaling about 2026. Why Dalio believes we're heading into a wealth transfer unlike anything we've seen in decades, and most critically, what you need to do right now to position yourself on the winning side of this massive economic shift. This isn't about fear mongering. This is about understanding the signals that smart money is already acting on while the majority remains completely blind to what's coming. To understand why Dalio is so focused on precious metals right now, you need to understand his framework for viewing the economy. Dalio describes the economy as a machine, a complex system driven by credit cycles, debt cycles, and most importantly, currency cycles. Throughout history, gold and silver have served as the ultimate store of value. When paper currencies lose credibility, whether through excessive printing, mounting debt, or loss of confidence, precious metals don't just rise in price. They signal something far more profound. They signal that the financial system itself is under stress. Consider this: in the 1970s, when inflation ravaged the U.S. economy and the dollar's purchasing power collapsed, gold surged from 35 per ounce to over 800. It wasn't just an investment gain, it was a warning signal that the entire monetary system was breaking down. Those who understood what gold was signaling protected their wealth. Those who didn't saw their savings destroyed by inflation. Fast forward to 2008. While gold didn't predict the exact timing of the financial crisis, Dalio's framework, which incorporated gold as a key portfolio component, allowed Bridgewater to navigate the crisis successfully while others collapsed. Dalio's all-weather portfolio strategy, which includes significant precious metal allocation, was built specifically to survive the kinds of systemic shocks that gold and silver warn us about. This is exactly why Dalio's current warning matters now. The signals coming from precious metals in 2026 aren't just about price movements. They're about survival in what could be the most significant economic transformation of our lifetimes. First, Dalio believes that gold and silver are signaling an unsustainable debt crisis that will fundamentally reshape the global economy in 2026 and beyond. Here's the reality. The United States currently carries over $34 trillion in national debt, a figure that has doubled in just the last decade. But it's not just the size of the debt that matters. It's the rate at which it's growing, and more critically, the cost of servicing that debt. With interest rates at levels we haven't seen in over 15 years, the U.S. government is now spending over $100 trillion annually just on interest payments. That's more than the entire defense budget, more than Medicare, more than Social Security, and this number is accelerating. Dalio has been explicit about this in his book, principles for navigating big debt crises. He writes, "There are limits to debt growth. When you reach those limits, the debt has to be restructured either through default or through devaluation of the currency." So what happens when a nation reaches those limits? History shows us there are only three options: austerity, default, or currency devaluation through inflation. And here's where gold and silver become critical indicators. Both metals have surged over the past 18 months, even as stock markets remained relatively stable. Gold recently hit all-time highs above 2,100 per ounce. Silver, often called poor man's gold, has shown even more dramatic percentage gains, breaking through resistance levels that held for years. This means if you're holding substantial cash positions or bonds denominated in dollars, you're essentially betting that the government can manage this debt without resorting to currency devaluation. Gold and silver are telling you that bet is becoming increasingly dangerous. When central banks around the world, including China, Russia, and even traditional U.S. allies, are purchasing gold at record rates, they're not doing it for investment returns. They're doing it because they see what's coming: a period where paper currencies lose purchasing power and only hard assets maintain real value. But here's the pattern interrupt most people miss. This isn't just about the dollar. This is about a global debt crisis. Japan's debt to GDP ratio exceeds 26%. Europe faces similar challenges. China's property market, representing trillions in wealth, is collapsing. When the world's reserve currency faces a debt crisis, while the entire global system is over-leveraged, there's nowhere to hide in traditional assets. But here's where it gets more complex and more urgent. On top of the debt crisis, gold and silver are signaling something even more immediate: aggressive currency debasement that will accelerate throughout 2026. Dalio has repeatedly stated what he calls a fundamental truth: cash is trash, not because paper money disappears overnight, but because its purchasing power erodes systematically through inflation, and in extreme cases, through deliberate debasement by governments desperate to manage unpayable debts. Look at the evidence already unfolding. Despite the Federal Reserve's claims of fighting inflation, the money supply expanded massively during the pandemic and has never fully contracted. Real inflation, when you measure housing, food, energy, and healthcare, remains far above official government figures. Your dollar today buys significantly less than it did 5 years ago, and the trajectory is worsening. Here's the critical insight from Dalio's framework: central banks are trapped. If they raise interest rates high enough to truly control inflation, they'll trigger a debt crisis and economic collapse. If they keep rates too low or cut them prematurely, inflation accelerates and currency debasement continues. This is what economists call fiscal dominance. When debt levels become so extreme that monetary policy is dictated by the need to manage debt rather than maintain currency stability. And gold and silver are screaming this message right now. When you see gold rising even as interest rates remain elevated, it's telling you that investors are losing faith in the central bank's ability to preserve currency value. Normally, higher interest rates make non-yielding assets like gold less attractive. But when gold rises anyway, it's a signal that the preservation of purchasing power has become more important than yield. Silver, meanwhile, offers an even more compelling signal. While gold is primarily monetary, silver has industrial applications. It's crucial for solar panels, electric vehicles, electronics, and countless other technologies. Yet silver is surging not because of industrial demand alone, but because it's following gold's monetary signal while simultaneously benefiting from supply shortages. So far, we've seen that precious metals are signaling both an unsustainable debt crisis and aggressive currency debasement. Both point to the same conclusion: holding cash and bonds in 2026 exposes you to systematic loss of purchasing power, and that's not even the scariest part. What most investors fail to understand is the speed at which these crises can unfold. Dalio studied this extensively in his research on debt crises throughout history, from Weimar Germany to Argentina to Zimbabwe. He found that currency collapses don't happen gradually. They happen suddenly, after long periods where everything seems manageable. The signals are there months or even years in advance. Gold and silver start rising. Central banks start accumulating reserves. Smart money starts rotating out of paper assets. But the majority ignores these signals because nothing seems immediately catastrophic. Then, seemingly overnight, confidence breaks, currency values plummet, inflation spirals, and by the time the average investor recognizes what's happening, it's too late to protect themselves. This is precisely what Dalio means when he says most investors are blind to what's coming. They see gold and silver rising and think, interesting investment opportunity. They don't understand these metals are warning them that the entire monetary system is under unprecedented stress. Now we arrive at the most critical insight, the aha moment that separates those who will thrive in 2026 from those who will suffer devastating losses. Gold and silver aren't just signaling crisis, they're signaling the greatest wealth transfer in modern history, and Dalio's principles show you exactly how to position yourself on the winning side. Here's what Dalio understands that most investors don't. Every major economic crisis creates winners and losers, but it's not random. The winners are those who read the signals early and position themselves in assets that preserve and grow purchasing power during currency debasement. The losers are those who cling to paper wealth denominated in depreciating currencies. Imagine two investors in 2026. The first holds a portfolio of 60% stocks, 40% bonds, the traditional allocation. When the debt crisis accelerates and currency debasement intensifies, here's what happens. His bonds lose value as inflation exceeds yields. His stocks crash as the economy contracts and earnings collapse. His cash savings lose 20%, 30%, perhaps 50% of their purchasing power within months. He watches his retirement dreams evaporate. Now imagine the second investor. She understood what gold and silver were signaling. She allocated 15-20% of her portfolio to precious metals. She diversified globally into hard assets, commodities, real estate in strategic markets, inflation-protected securities. She followed Dalio's all-weather strategy designed specifically to survive exactly this scenario. When the crisis hits, her precious metals surge 100%, 200%, perhaps more, not just in nominal terms, but in real purchasing power. While others scramble to preserve wealth, she's accumulating assets at fire, sale prices from desperate sellers. She emerges from the crisis not just protected, but significantly wealthier in real terms. This is the wealth transfer. It's not theft. It's not luck. It's preparation meeting opportunity. But here's the urgency. The window to act is narrowing. Once the crisis becomes obvious to everyone, precious metals will gap higher overnight. Premiums will spike. Availability will become scarce. You won't be able to position yourself at reasonable prices because everyone will be trying to do the same thing simultaneously. Dalio's framework gives us specific action steps. First, allocate a meaningful percentage. He suggests 10-20% to gold and silver, not as a speculation, but as crisis insurance. This allocation should be in physical metals or highly secure allocated storage, not paper certificates that could become worthless if counterparty risk materializes. Second, follow his principle of diversification across uncorrelated assets. Don't just buy precious metals. Build a portfolio that includes inflation-resistant assets, commodities, real estate, treasury inflation, protected securities, and even some cryptocurrency as a hedge against complete currency system breakdown. Third, reduce exposure to long-duration bonds and excessive cash holdings. These are the assets that will be decimated by the very forces that gold and silver are warning about. If you need cash for near-term expenses, keep it, but understand you're trading safety for guaranteed purchasing power loss. Fourth, think globally. Dalio's framework emphasizes that when one major economy faces crisis, capital flows elsewhere. Consider diversifying into assets and currencies in countries with stronger fiscal positions, though recognize that this is a global debt crisis. So no geography is completely insulated. The concrete framework is this: crisis protection, inflation hedging, global diversification, and hard asset allocation. This is precisely what Bridgewater strategies employ, and it's why they've survived and thrived through multiple market crashes while conventional portfolios were destroyed. The window to act is measured in months, not years. Gold and silver are giving you advance warning. The question is whether you'll heed it or join the majority who will recognize the signals only after it's too late. Ultimately, what does this all mean for you and your financial future in 2026? We've established that gold and silver are signaling three critical warnings: an unsustainable debt crisis, accelerating currency debasement, and an imminent wealth transfer from the unprepared to the prepared. These aren't separate problems, they're interconnected forces that will reshape the economic landscape. The question that opened this video, why are most investors blind to what precious metals are signaling, now has a clear answer. Most investors are blind because they've been conditioned to trust that the system will always self-correct, that central banks will always find solutions, that paper wealth will always maintain its value. But Dalio's entire career has been built on understanding that systems break, currencies fail, and those who read the signals survive while others suffer. In short, Dalio's message is this: gold and silver are not just investments. They are signal systems, early warning indicators that the foundations of our monetary system are cracking. If you prepare now by following the principles we've outlined, allocating to precious metals, diversifying into inflation-resistant assets, reducing exposure to paper wealth, and thinking globally, you position yourself not just to survive the 2026 economic crisis, but to emerge stronger. You'll preserve purchasing power while others lose it. You'll accumulate assets at distressed prices while others panic sell. You'll navigate the wealth transfer from the side of the winners. If you ignore these signals, if you maintain conventional portfolio allocations built for a stable monetary environment that no longer exists, you face systematic destruction of wealth through currency debasement, debt crisis, and market collapse. This isn't speculation. This is Dalio's framework, proven across decades, across multiple crises, across different economic cycles. He built Bridgewater into the world's largest hedge fund by understanding exactly what gold and silver signal and positioning accordingly. The economic machine, as Dalio calls it, is breaking down. The debt cycle has reached its terminal phase. The currency debasement has begun, and precious metals are giving you advance notice to act. The knowledge is yours. The signals are clear. Now it's about execution. Will you be among the prepared few who understand what gold and silver are screaming? Or will you join the blind majority who will recognize these warnings only when it's too late to protect themselves? What's your take on this? Are you positioned for the 2026 economic crisis, or are you still holding conventional assets that gold and silver are warning against? Let us know in the comments below. We want to hear how you're preparing. If you found this analysis valuable and want to continue learning from Ray Dalio's principles and other legendary investors, subscribe to this channel. We break down complex economic concepts into actionable strategies that protect and grow your wealth. Next time, we'll explore Dalio's specific recommendations for building an all-weather portfolio that survives and thrives regardless of economic conditions. You won't want to miss it.
Thank you for watching. Please subscribe.